and I'm going narrow for a little bit until I'm just kind of convinced this whole trade war stuff has kind of settled down and that's not in the market anymore. Because I mean, we could have an announcement today that's particularly bad, and the market could go down, 7% or up again. That's just kind of the regime we're in right now. So I think it's better to keep things a little narrower.
The price being 10, which would have been a max loss, it was probably sometime 15, 20, which is not correct. It's impossible for you to lose that much. So you just use your experience, use your math, use the basics, and say, okay, what he did is say, okay, we put in a number that might work, and that's what happened. He was able to get out. Was it still his biggest loss? Yeah, but nothing to, Let's now look to see if it's any zero DT trade that we would like to do. And if it is, we will do it. If not, we will not. So let's look at here, and let's do. I just want to get a feel for what the straddle is saying right now. So it's 50. So about let's just say 50, 102 points, give or take. That's the directional move. TastyTrade is saying 48. So let's just see if we went 100 points down from where it's trading at now. So 52.21, that would be around here, and that's around an 8 delta. So maybe we can go lower than that, and let's just do a 20-point wide, and then let's go to the call side. So 54.20 would be the call side. I'm just doing 100 points up. That's around a 7 delta, so we can probably go further than that. That's $170. That's not bad for a zero DT play. Man, that looks actually really, really good right now. I really like that. If you wanted to get a little bit more vigilant about the downside, I don't think we're going to fall another 100 points, 170 points down today. That seems like a lot, but if you wanted to give your put side just a little bit more room to the 52.10, keep it 20 points wide, that's still giving you 150. If you wanted to move your call side just a little bit more, do something like that to say we had a big reversal, because maybe some deal will come out. That you always have to have that in mind. So that's why you have to have that stop, you guys. So I'm going to go with this trade. It doesn't mean it's going to work, right? The probabilities look great if nothing changes, but we could have some type of information come out that the market shoots up in a big way. If we don't have any information come out, I think that it's not going to drop another distance like this. But this is 130. We're going to put our stop, and so this is the trade here. We're going to send this, and we're going to see if we can. And we got filled right away. So what we're going to do, you guys, we're going to put our stop. This is how you put your stop. I'm going to put a stop limit. So we're going to put 75 times 3. That's 225. So let's go here, $2, and let's go 220 and 225. Let's even go 230 just in case this jumps up a ton to the upside. I even go 240 if that jumps up a ton. And so there we go there. And then on the put side, if we go here and do this trade, I'm just going to put the alert based on this here, and I'm going to put stop limit, and I just say 60 times 3 is 180. So I'm going to put it a little bit better than that. So I'm going to go 180, and just in case, we're going to go $2. So keep in mind, you guys, we collected 130. So if we get stopped out on this put side at $2, that would be 2 minus 130 is obviously $70. So we're not going to be down a lot if that's the case, and then we can come back in with one extra adjustment or something. But got to stay disciplined and let these alerts work. All right, and so this is the trade here, and we're going to see how it plays. We're going to see how it plays out. But I think we have a decent amount of distance on the call side and a decent amount of distance on the put side. Before we continue with the video, I just want to quickly point out, if you need any additional help, please consider joining our trading club. You can do that by clicking on the link in the description area, and you'll get a 3-month trial for a flat fee of $60. We look forward to seeing you in the trading club. Back to the video. Avi, what's up?
Yeah, I was just gonna ask what's drove the decision to make the wings 20 points wide instead of 10, because in the past it was 10.
So for me, it's usually 20. For Dr. Meadows, it's usually 50 or more, but recently he's been doing 10. But to answer your question about the zero DT, I almost always go 20 points wide, and if I'm not going 20 points wide, it's usually wider than 20, like maybe 30, 40, sometimes 50. I never go wider than 50, and probably very rarely go, if ever, go less lower than 20 points wide. So there we go.
And then in terms of with Dr. Meadows going with 50, given that the risk is max risk is kind of increased by 2.5 times.
Absolutely.
Does he reduce the number of contracts or still?
So he stopped going 50 for now. and he's been going 10. He's been going 10 wide. So that's how he's reduced his risk. And it really, really saved him last week. And I'm not saying like save like he would have been out of business or account would have been hit. He don't trade that, but he trades very small for his account size. But it was his biggest loss that I've seen him since late 2018 on a 0 DT trade. And it would have been a lot bigger if he wasn't 10 points wide last Wednesday. Because of that 10% up move, it shot up so much that his stop loss didn't get triggered, and he had to switch it and get out because he was fortunately watching it enough to see what happened.
Hey, yeah, O'Brien, you're exactly right. I have been going 10 wide, prior to that, just because, the big moves we have been seeing in the market, 4 and 5% and that kind of thing, and just recognizing that it's those types of moves, which oftentimes can happen really suddenly, and the whole stop loss risk, which made me go that route. And and just to recap, so yeah, we went up really, really rapidly on that 9% up day kind of thing. And I'm looking at my stop, and it was so crazy because both strikes were in the money and the mid was all over the place. So in times past, when the stops haven't worked, when the market like settles down and whatnot, it sometimes is filled for my original stop position on the way back down, but that market was not coming back down. And when both things are in the money and the market's moving around and whatnot, the mid price was kind of crazy. I mean, it was oftentimes more than the width of the spread. So I know like things are just way off. I somewhat arbitrarily kind of doubled my stop position from like it was like at 2.5 up to like 5.5 or something like that, and it wound up like filling. But just to put that in perspective, the max loss on the spread, like I said, it's the width of the spread minus the credit, right?
Yeah.
Versus if I'd have gone 50 wide that day and like that short strike stop didn't work. I mean, you could easily have been looking at like a 30x or a 40x kind of loss on a day like that. You know what I mean? With just that short strike going so crazy without the long meter. So, yeah. So, like I said, for now, and I think I typed that into the Discord the other day because somebody asked the same exact question. That I'm going narrow for a little bit until I'm just kind of convinced this whole trade war stuff has kind of settled down and that's not in the market anymore. Because I mean, we could have an announcement today that's particularly bad, and the market could go down 7% or up again. That's just kind of the regime we're in right now. So I think it's better to keep things a little narrower.
Well, it's for that same reason I'm just trying to avoid overnight risk on these things, just because of developments that happen when the markets are closed.
And O'Brien, I mean, are you've been getting off of the 1 DTE and even the 7 DTE, right? Because of that same thing.
Yeah, I've done it less, but I've done the 1 DTE the last 3 nights, and 3-4 nights, and today has been the first kind of time I haven't been able to get out of it within the first 15 minutes. So,
Okay.
But it is a lot more overnight risk, Avi, and everyone on the call. And so you have to you try to have to calculate the risk the best you can. And so and for me, I think like like last night, I was thinking, okay, well, I don't think any news that is negative is going to cause the market to fall a ton. But I do think if any positive information come out, it could cause the market to jump up a decent amount, 3-4%. So I try to factor that in, and then you can see that some negative news did come out last night, and so but it still hasn't fallen enough to hurt that 1 DT trade at this point the way we structured it. But that that can change because we unfortunately still in it, and you guys know we like to be out of it by now. But that's it. It is a lot more overnight risk, and it's been that way since the beginning of the year. So you have to be a lot more strategic, a lot more calculated with the overnight thing, because that's the reason why I got hit on that 0 DT before, because I decided to roll it out and not follow the way Dr. Meadows does it. I just thought that was the better decision, but it was the wrong it was the wrong timing of it, because any huge move, it can really hurt me, and that's what happened plus some. So.
Okay.
And so you just have to be vigilant. And Dr. Meadows has been great at it, right? Meaning that when he's not 100% certain of a trade, he would trade a lot smaller. Sometimes he would go to just 5 contracts when it's really kind of muggy, the vision. And then in this case, just going 10 wide was really, really clear and and smart, because he can see that the bid and ask was jumping around, and sometime instead of being the price being 10, which would have been a max loss, it was probably sometime 15, 20, which is not correct. It's impossible for you to lose that much. So you just use your experience, use your math, use the basics, and say, okay, what he did is say, okay, we put in a number that might work, and that's what happened. He was able to get out. Was it still his biggest loss? Yeah, but nothing to write home to moms about, nothing to cry about, nothing, just okay, they got me this time, and 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 you just move on.
Yeah, no,
So
I do like the 7 DT trades
mm,
better, but just since Liberation Day, 0 DT has been easier to manage since I can just watch the
you
VIX
can
and FPX in real time.
exactly, and you usually don't have intraday announcements that important. That way, like the administration, just like they waited to kind of go to the Rose Garden after the market closed with the liberation announcement, right?
Mm.
And but it felt like it was almost intentional. They wanted to see what the market would do by announcing that in midday. It was literally midday, and so and obviously you felt like it was going to be positive, right? You're not gonna announce anything that could potentially be negative and worsen that trading session, and then people start going on TV shows saying the market dropped because that was they didn't like the policy, right? They're not going to do that, but you will do in an opposite direction if you think it's going to be big. And they couldn't have calculated it was going to be 9-10%, but they knew it was going to be a good hit for the markets to the upside.
Mm.
Yeah. So anyway, you have a little bit more intraday risk than you normally have with the 0 DT right now, so that's why Dr. Metals is trading accordingly. And then you also have obviously a lot more overnight risk than we've had in the past. And I've been doing that 1 DT trade for over 2 years, and this is the most overnight risk I can, you know, by far is the most overnight risk on a consistent basis that we've had. So.
So in terms of the max risk as a percentage of say net liquidation value, is there
Mm.
kind of a guideline on that? What's
Yeah, so the bigger your account, the lower it can be, but for most people, I say no more than 5%. Right?
mm,
So if your account is $10,000, let's just say, just easy
yeah,
math for me, you don't want to lose more than 500 on a 0 DT trade. I know you're not going to be doing it unless you have more money spread around accounts. Like you guys, if you're watching, you say how does he do this 0 DT trade, and he's doesn't have 25,000 in the 0 DT account. Well, because they account all the other capital in the different accounts, so it's over 50K, so they allow me to do it. Okay.
mm,
And so that's why. But so using an example, I shouldn't lose more than 500 if because let's say it's a smaller account and I had 10,000 in it. As I say, I wouldn't want to lose more than 500 on one given trade, but ideally less than that, right? So for example, let's just say I only lost 200. Well, if I'm making $100 a day, well, I can get that back in 2 days. Right? And
exactly.
that's usually how Dr. Metals does it, right? He usually can get his losses back the next day, and usually never more than 3 days usually. Okay.
Mm,
So you want to kind of mirror that, because that keeps you keeps you in the game, and obviously your losses are so small, and it makes sure you don't have a big loss that wipes out a lot of your gains in one shot, right? Like what happened to me, up 30+%, and I roll it out, and the market is wake up the next morning and you're deep in the money, and it's pretty much nothing you can do at that point except try to trade around it, and so that's what I'm doing now.
okay.
Yeah.
Yeah, I think I don't know. I kind of think 5% might be too high, but
Well, yeah, but I agree, but when you have a smaller account, you have to try to mirror the mechanics as best you can. And
yeah.
so if you did a 20-point wide spread, right? And let's say you collected $100, and then you do three times that, well, that's let's just say $300 loss, minus that is minus the credit you receive is 200, right?
Mm-hmm.
But let's just say you want to, at that point, that makes sense, right? But let's say you want to make an adjustment, and then now you made an adjustment, and you have to do and you do the stop loss again three times the new amount. Well, that can technically sometime be higher than what the original loss could be, right? So to give yourself flexibility, that's why I'm saying 5%. But is that too
Okay.
high for most account sizes? Absolutely, right? You want to be lower than that. Usually, Dr. Meadows, when he loses, it's less than 1% of his account. It's probably like
Mm-hmm.
sometime most of the time less than a 0.5% of his account, right? So the bigger you are, the smaller the percentage loss you want it to be. Obviously, you don't want to be 5% of, let's say you have $1 million account where you just lost $50,000 in one trade.
Mm.
So that doesn't make any sense. so
But
so
yeah, when you take out the
and
swaps, then the max risk is sort of less. So
So absolutely. So when you let's just say you had $1 million account and you had a 1%, right? Well, 1% is 10,000. That's still that's still kind of crazy rare and almost never. It has been never before last week. Dr. Meadows' biggest loss was 6,000, I believe, and so last week I think he lost 10,000. So I just I'm not saying what his account was is, but I say math wise, I mean just easy math. If it's $1 million, then that's still less than 1%, right? So I'm not gonna say it's insignificant, but it doesn't change the game, right? And
yeah.
and so, but most of the time when he loses, it's like 2,000 or less, right? But I just say 2,000. Well, he can normally get that back literally the next day.
Hmm.
Right? So that's why I love the way he's trading. Is it a little bit more benefits for a bigger account? Absolutely, right? But you want to try to mirror that with a smaller account. So that's why you have to you want to mirror the type of adjustments and things like that. So that's why you have to give it a little bigger percentage sometime with a smaller account.
Okay, so for larger accounts, maybe 2% or 1%.
So absolutely. So if you had $100,000 account, I would be 1% is 1,000. Probably 2% is 2,000. That's probably the extent of it. But I would probably be somewhere around a 1%.
Mm. Okay.
Because the more occurrences the better, and then the more you realize you can't be ruined, right?
Mm.
And if you know that, okay, I lost 5 times in April, for example, but I still ended the month positive, that gives you a crazy amount of confidence that this works.
Mm.
Or I just say you finish the year and you look back the way Dr. Meadows normally looks back and says, okay, I was down 2 out of the 12 months, right? But overall up nicely, and some of those months didn't look great, but that's just the nature of the game.